All right. I think it should be working now. Let's see if it's working. Um, doesn't seem to be working. Is it going? Yeah, there it goes. Let's see. Yeah. Oh, that was the one that was on before. But now it should be live now, yeah. No. Oh. Is it going? Okay, yeah. There it is. Okay, I'm so sorry about that. But I'm here now and I'm gonna just get started. So today, my friends, it's a good day. I'm gonna be doing some algorithm creation, hopefully getting rich, hopefully having to take this video down because it's just too valuable. And yeah. So right here I've plotted the bull and bear divergences, and I think what I can do based off of these is create a number that calculates the difference between the red and green triangles. So I got this right here, and I'm pretty sure uh, it incorrectly picks every single candle. Actually, no, it doesn't. Look, sometimes there's not bullish divs. Oh, that's interesting. So if I just let me make this full screen. Okay. Okay, so I'm just looking at 1 minute Bitcoin chart, and then here's all the bullish and bearish divs. So, aha, the bearish divs disappear when it's going up. Ooh. Big bearish div with no bullish div. Huh. Interesting. So, I wonder if wow. Um yeah, that's very interesting. What if I switch it over to the 1 hour? Okay. See, there's some bullish divs with no bearish divs. And I think that actually is a good signal. 3 hours. What about... let me just pick a random time and try to find some bullish divs there. buy here, and now let me try to find the next bearish divs with no bullish. So that would be like right here, right there, and then right here. But see, a lot of the time the signal comes in too late. So let me ask ChatGPT. But first let me ask it this. Can you also make it so the signal is generated immediately on candle within the candle? So if there is suddenly bearish div on the 1 hour candle somewhere in the middle of that hour, it will print and show me right away, so I don't have to wait for the close of the candle to get in on the trade. Okay, so I was asking it to create a divergence indicator, continuous divergence indicator. And it's saying it's complex, but I do think it's a little more complicated, but I don't want to use the word complex ever. Compare the rate of change in price and the rate of change in the oscillator. Yeah, the derivative of the price and the derivative of the oscillator, and see if the slopes are different. Exactly. And we can do it for multiple time frames. So we can do it for 5 minutes, 3 minutes, 2 minutes. So it's gonna be 2, 3, 5, 12, probably 24, 30, 36 is nice. Just like do it for a bunch of those and have filters on all of them. So when you get a divergence on one, it all reports to the central program. And I wonder if it would be actually better for me to do this in Python, because it's really just backtesting. It's really just taking this data and fitting a strategy to it, right? As long as I have a decent amount of data. That's why I like the daily. I think I should just look at the daily and just predict from, you get a lot of data, and then you start predicting right here or whatever, because you have sufficient history, and then just see how it performs over this whole period right here. So let me think. See, this really helps to be streaming on YouTube, because I can get my ideas out, but I do want to write it down. I'll keep talking, and I'm going to write it down as well. And I want, if you're listening and you're with me and you enjoy this, I want you to also write something that you think is going to help you, because the reason I'm doing this is I'm sick of consumer internet culture. I'm sick of being a consumer. I'm sick of spending my money and not generating things and, you know, providing. And that's what I'm doing here. And I want you to do that for yourself as well. I don't want you to become a consumer like me and just consume what I'm providing. I want you to be involved in your own education and life and making money. All right, so divergence, right? We're looking for divergence between like at the very tops and bottoms of markets, you see exactly this type of action, right? Where you have such strong momentum. And let me take off the logarithm just so you can, oh, whoops. No, we don't want, oh God. Yeah, there we go. Take off the logarithmic. Because you can see that we have this sharp parabolic movement, right? And then it should continue at that pace, but it doesn't. It goes higher, but not high enough, and the pace of it slows down. And the z-score of the strength of the trend is declining, right? The second derivative is negative. So we have the price, which is essentially in physics the position, right? And then we have the moving average, which is the velocity. It represents the rate of change in position, kind of. Actually, the slope of the moving average would be the velocity, right? So the moving average is also position, because it sort of shows what the average price is in the last amount of time. So you can see if it's above average or below average. But what if we want to know the direction? Then we take the velocity or the slope of the moving average, the instantaneous rate of change. The instantaneous rate of change of the price or the moving average. And the way that we calculate that is there's no actual formula, because this isn't a function. This is not a function, right? This is just data. This is not a mathematical function. So we can't take the instantaneous rate of change. However, we can just take the slope between one, right? The slope of one unit. From the previous unit to this unit. That's the slope. The current slope is what it just did. Right? Yeah, what it just did would be the slope. So the way we're going to calculate that is we're going to do rise over run, which is, I think, a good way to do it would be like a time weighted average of the price, right? So like, because if you look at this candle right here, right, this is a day. This is one day. In one day, Bitcoin went from 27,655 to 33,514, a 21% move in a day, but it actually closed red, and it started at 33 and it ended at 32. So how are you supposed to know what this price action really was if you're just only looking at the closing price of each one of these candles? You need something more nuanced. I mean, the closer you can get to real time, the better, I would say. So maybe I should look at like the 1 minute candles, but you know, we want to be able to do analysis on the daily candles as well. So the algorithm needs to really work for any series of candles just based on the price action of them. So okay, here's another good way to do it. We can take the slope of the price, and when the slope changes, yeah. So I think it's good to have these sort of derivatives. So what do I mean by price? What do I mean by price? Well, let's look at the candle here on Coinbase. Oops. Oh no. There we go. Oh, there it turned red. So how do you decide when to get into the market? I mean, or when to get out of the market? How much? Let me see what kind of range this is. 0.19. So that's just, you know, that's not even worth it. Slope. So this is very parabolic. It reaches a max, comes down, right? Comes back up again. Price is near where it was, near the max, but the slope is much less. So that's a divergence, right? Let me just write this down. A divergence is when price does a parabola. Does a parabola with, you know, growing velocity. See, the distance between the price and the moving average continues to expand, right? With growing distance between moving average and price, eventually resulting in a peak. Um, then step 2, price comes back near, like above or below the previous spike, but the moving average has caught up and it's really no longer in that really good range. So okay, so but you know, strength is weakened. Yeah, strength is weakened. Like it loses it. It tries to come back, but it just can't. I mean, what about this one? Parabola. Yeah, it just becomes more and more risky the higher you are, but the moving average catches up to you. Right? Yeah, so I think the end of a trend or the best time to get in is when you see a widening and then you see a lower price that's even wider and you see a lower price that's even wider again. But I guess that's kind of difficult. What about if I look at the 1 hour? So what's happening right now in Bitcoin is this fractal right here. Guys, listen up. Listen up. I got this right here. This one, see that? Is the same thing as this one. See? Because we come up to this high, we pull back, break out to a higher high, but that's the fake out, right? We get these highs right over here, right? Okay. We break out to almost 32,000, but that's actually the fake out, right? That's what just happened right here. And you can see this moving average, see it stalled out right here and then it caught up and then it broke down because the moving average caught up with it. See, boom, sideways, moving average catches up, fake out, breaks down. That's what's happening right now. It's basically the same thing right here too. right? They just take different lengths of time and they go different depths. This one will probably be no different. I guess you could say I'm a short-term bear, but my money is not where my mouth is. My money is long. My money is exclusively long on Bitcoin. Yeah, I'm not messing around with no selling, you know, because this low could just be like this low, and we could just shoot up and never pull back. That's totally possible, right? Bitcoin likes to repeat itself, but it never repeats the same way. Every bottom is different, right? This bottom was unlike any bottom we had ever seen. I was almost 100% sure this was the bottom at 17,500 or whatever it was. And then it went lower. And then I was sure that this was the bottom. And then it broke out really fast and sharply. And then it has never done something like this. Usually by now, it would already be crashing or much higher. But yeah, if you look at Bitcoin, it looks to be, I guess, similar to this, unfortunately. You know, if you really look at it, it looks eerily similar. But we could be a little bit farther along. Like maybe we're right here, you know? Maybe we're around here. Cause like this is like this. See, this one bottomed in December, but it didn't start even going up until April. But we started going up in January here. We're 4 months ahead of schedule. So technically now would be, if you go 4 months back from today, that would be March 25th. I mean, sorry, 4 months ahead of this, right? Because they broke out in April. We broke out in January. So we're 4 months behind them. So if I add 4 months to this, we'd be in November. So yeah, maybe we're more like down here at these levels, you know, around here. Because if you really look at things, what's this level right here? Right, if I draw a horizontal line right here in November, you know, mid-November, right here, near the bottom, that's where I'm saying this is a kind of equivalent to where we're buying right here. Because, look, this was basically a resistance support level, right? It was a support level twice, sharply, and then it broke down, faked out, tested as resistance, and then broke down. And then it broke above it, retested it, you know, and then it bounced off here in the middle of the recovery cycle. And this was a very important support and resistance level. Clearly, right? Around 7,000. Now, look at that. Okay. Now, draw another line right here, where we are right now. 29,000. Same thing. Very clear support level. Turned into resistance, right? Turned into resistance. But now it's checking out above it. It's pretty damn close, you know. And that represents a gain of, let's see, 315%, which is about the same as here to here, I think. Nope, actually it's not. What about here to here? Yeah. 315%, about like that. Yeah, it's rather interesting how the chart of BTC looks. I mean, we also could not be here. We could be just right here, right? Like, we were at the bottom at 15K, broke out, one wave, two waves, and now we're just chilling on the second wave. So that would be just like that. I mean, one wave, two waves, three waves. That could mean that we're more like this. One wave, two waves. One wave, two waves, three waves. It's rocket science. I'm not making any sense right now. I mean, initially what I was thinking is that this one is looking like this one. Because I remember this really faked me out. You know, it looked very toppy. Looked like a distribution pattern. Looked like very bearish, right? And it was. But then it did this. And then it broke out. And that was the bull run. Here, we came down all the way to the ground. And then we snapped it right there. Chilled still near the bottom. Didn't really break out until March. See, now it's just marching up these levels. I mean, right? It's just marching up these levels, and it's looking so much more like this one, guys. I'm sorry. It just is. Like, this was the bottom, right? And it didn't really break out until here. But it did this thing. Boom. 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 And it took a long time, right? From here, from when it broke out, and it crossed over these little shits, right? Crossing over right about here. All the way to October 15th. Right, to about right there. 228 days. This is the blueprint, not the last cycle. This cycle is much more similar, and I don't want to get into all the reasons because I've explained it a million times, but you can just do your own research and figure that out, basically. And I can point you in the right direction. I mean, this consolidation right here looks a lot more like the bottom that we had, right? Because there was the long 2019K bottom. It came up, and then it came back to the real bottom again, where it was below all this stuff, very depressing, right? And then it finally did its thing. That's what just happened. So this was how many days? 200, 232 days before it really did its thing. And now I'm going to do the same thing up here. Yeah, so now I'm measuring from this breakout, January 11th, plus 232 days. That would put us August 31st. Shit, maybe it'll be time to buy in September, bro. Ugh. Yeah, I mean, I see this as doing this. Going like this until September, like I said, and then going like that. And we're going to come up to here, 46,000 or 45,000. And then we're going to pull back to some fucked up level like 38,000. And then we're going to break that, come to here, take a pull back down to this level. Come back up to here, break that one, break this one, right? That's what's gonna happen, my friends. 2024. By the time the halving happens, we'll be at least here, right? We'll be here, 45K. That is for sure. That is my prediction. I'm never ever wrong. And yeah, fuck you if you think I'm wrong, because I'm not. Yeah, this, wait, let's get the good chart. Bitstamp, baby. See this? Wow. You even go back 2013. That's insane. Yeah, see, what was this one like? See, this one is also interesting to understand because it's more about the timing, not the percentage. Right? It was at this terrible bottom right here. And it took this many days, 379 days. But what about from right here? Yeah. Right there. 225. Oof. Yeah, truth be told, we're going sideways right now, and Bitcoin is the best long-term investment in the world. And we're going sideways right now. And all you have to do is hold it at whatever fucking price you bought it at. It doesn't fucking matter. For all you stupid fuckboys who think crypto's a scam. I don't care where the fuck you bought this. You can buy any candle in this goddamn chart and you will be in profit in 2025. Actually, probably 2024 you'll be in profit. As long as you don't fucking sell and you don't buy for some scam and blame it on everybody else. Blame it on crypto. Stop being a fucking retard. Right? This is looking weak though. And we'll probably go sideways until September. So that means we got all of August to fucking cry and whine like little bitches, and eventually you'll stop whining. We're in one of these, right? We're in one of these. This is the recovery, right? This is the bear market. Boom. This is the bull market, aka recovery, that goes up and then sideways and down, but mostly up, and you end the year way higher than where you started. This is what's happening. This doesn't happen the exact same way every time. Look at this one, and then look at this one. Right? Bottom, recovery, completely different. It looks nothing like that one. And then bull market. After the recovery comes the bull market. See, the bull market. Bull market, complacency top, sideways top pattern, bear market, recovery. What's next? Tell me what the fuck is next. No bias. Where's my YouTube? Where's my YouTube? God. Yeah. Let's see this. Is anybody?
Bias.
Whoa. Okay. Dot. Look at Dot. Gorgeous. Absolutely gorgeous. It's beauty. It's beauty in the making. See, Dot is one of those that you should probably only buy now. I mean, if you're gonna buy it, you should just buy it now, right? Because you're looking at an accumulation pattern. You're looking at a recovery pattern. This is an accumulation. This is a break of the downtrend, a back test of it. Is this log? There's a log. You know. Is this really the log? Where's my log? Yeah. I mean, it's more like this, right? You go like this. That was it, right? It was in this downtrend. And then now it's not. It's not in the downtrend anymore. And it did this spring. And it's in an accumulation pattern. Right? Look at this. Divergence. Double bottom. Spring. It's pulling back right now. But if it doesn't go below this level, this bottom, it's the upside is much higher. So if you're talking about risk to reward, you know, your reward is coming back all the way, you know, $16, right? That's your reward. $16 to $24, and your risk is not even 20%. 20% compared to 360%. Very good risk to reward. But anyways, let me get back to my trading strategies. What if I want to look at something that really did extremely well, like comp? Go to comp, and they should have it like from back in the day. No? Okay, guess not. Compound. Man, comp BTC is a sad, sad look. Comp USD's not looking that good either. I mean, in the short term, but it's just crazy. I think the reason this thing goes, a lot of these cryptos go down so much is that is because of their inflation and their supply and demand, like economics, like the tokens. And they just get washed. They just get traded, washed. And they become just old garbage with no utility. Just money to most people. I mean, this is a sign of strength, though. So, nothing wrong with it. Link, same thing. Oops. I don't know what the fuck this indicator is that I made. what is this blue line that I have? Times 100. Oh, this is percent. Yeah. Interesting. That one was very strong, right? This is strong. This is strong. And then it dies. This is strong. I think we already saw this, right? And now we're in this phase right here. Yeah. So now we are breaking out on comp, actually, on this daily chart. Because this indicator that I have right here, this blue line, is really nice, actually, for seeing these divergences. Right? Because we got a breakout with a bit of a hidden bullish, I think. I'm gonna have to figure out how to quantify that. This one was fake. Yeah, comp is going up. Buy some comp. How's Doge? Doge is going up, exploding. Not touching it. There's no way I'm touching it. What about Stellar? This thing is very volatile. You get a nice spike like that. That is strength. And then divergence. So you sell it. Yeah, that's some weak shit. Pointing down again. Down, breakout again, strength, breakout again, strength, and now it's just a little confused. Probably just a hold. XRP is probably gonna be the same thing. There's a breakout, right? This was a very significant breakout. We could, however, go... See, this is my problem with trading, is that I am just trying to tell a story for something that I'm already biased towards. But without being biased, if we're not doing the whole, like, XRP needs to break out because that's what it's done in the past during this time. Like, if we're not doing that, then we just have to look at TA. And, you know, there was a big significant resistance level right here at 55 cents, and we just blasted right through it. And then we got to this resistance level and got rejected. And now we're in the middle, falling. Go to the 4-hour. It looks like it wants to go sideways and down and then go up and explode again. Right? It's just doing the same thing that it's been doing since January, actually since November, right? Where it comes up, it looks like it's finally good, and then it just comes back down, makes a higher high, comes back down again, makes a higher high, comes back down again, makes a higher high, comes back down again, right? Actually, it's been doing this since June of last year. It's been doing this kind of slow climb with lots of fake outs. I guess the major resistance level is really up here, which is almost where we got. I mean, we can easily come back and retest that area, or this area, 70 cents. I mean, if we hold right here at 70 cents, we can just keep going back up, retest the top, and then maybe break it. Or not break it, but at least come back and retest it. Oh, we're seeing divergences now. Oh, look at that. Okay, that one was not really divergence. This one definitely. I mean, look at that. That one definitely. And this one, super most definitely. Definitely a divergence. And now it's going up. But not really yet. Not convincingly yet, but it's probably still worth a long. You can just buy it, hold it. Unless I'm just trapping you into one of these again. You can just come back down again. 68 cents. This is a 30-minute time frame though. So if we switch over to the 4-hour, you can see the divergence right there. And it's already starting to play out. So this one could be a little bit stronger. You know, but we know how XRP is, right? You get a nice divergence like that, you buy it, you're all excited at 48, 49 cents, and then boom, come back down to 46, get wrecked. And then, you know, so trading with leverage is usually not a good idea unless you're very, very, very good with trades and with risk management, like managing your, like, the money in your trade. It's not just being right with your direction, it's stop losses. It's literally stop losses. It's literally, you know, having a plan for how you're going to execute everything, or how you could potentially do it. So what is this number that I have right here? Z-score bear? What if I switch this one? Okay. Save. Oh, it's a different one. So where's the blue? This one? That's RSI. Oh, it's fucking RSI, dude. Oh my fucking god. Really? Okay, well, RSI is a pretty good indicator. RSI is a pretty good indicator. So how about whenever the gray hits -2, we buy. And when the red hits +2, we sell. Yeah, it's looking oversold, right? Yeah, it's starting to look oversold. Watch out. Watch out. We're going to start bottoming really soon. All right. Well, I think that's enough for me for today. Hope you guys enjoyed.